Hello guys, welcome back to the channel. Today's video will be a new entry into the Tokenomics series. We'll be covering Solana in today's video. Before we get into the video, please leave a like and subscribe to the channel to see more of this content. And if you want to buy any Solana, support the channel and sign up to MEX Exchange using the affiliate link in the description below. You'll get access to over 1,400 trading pairs and 10% discount on trading. For those wondering what tokenomics are, I'll give a brief overview of what that word means now. Tokenomics is a broad term which describes all the elements that make a particular cryptocurrency valuable and interesting to investors. This includes everything from a token supply to how it's issued, to things like utility case or basically what the goal is to achieve in the crypto market. So therefore we'll be covering all this information and more, plus at the end of this video I'll be doing a price prediction for the coin we are talking about. Solana's origins date back to late 2017 when founder Anatoly Yakovenko published a white paper draft detailing a new timekeeping technique for distributed systems called proof of history. In blockchains like Bitcoin and Ethereum, one of the limitations to scalability is the time required to reach a consensus in order of transactions. Anatoly believed his new technique could automate the transaction ordering process for blockchains, providing a key piece that would enable crypto networks to scale well beyond their capabilities at the time. Solana launched on the mainnet beta in March 2020, shortly after raising $1.7 million in a public token auction hosted by CoinList. The project's beta network featured a basic transaction capabilities and smart contract support, but it did not include any staking rewards as Solana was still determining its ongoing issuance schedule. Solana has now grown to be the 9th biggest cryptocurrency in the world, and I want to explore how they did this in this video. The tokenomics behind Solana are very spread out in terms of the launch allocation. The token allocation is shown here in this pie chart. The largest chunk being the seed sale at 25.6%, which is the allocation towards the original investors in the coin. The second biggest chunk is 20.4% for the founding sale. This comes after the seed sale and is for the founders of the coin to buy in more. The third largest chunk is 20.2%, which is allocated to the Solana Foundation. The foundation aims to develop the network and drive adoption of the coin over the years of Solana's lifetime. Next is 20.2% again for the Solana team, so those who contributed to the coin and helped it grow. There's a validator sale of 8.2%, which goes to node validators on the network. Lastly, we have a public sale and strategic sale. The public sale is 2.6% and strategic is 3%. So that's the initial coin allocation for Solana. Currently, Solana has a market cap of around $11 billion and a circulating supply of 350 million coins. There's a total supply of 500 million coins, but some of it has been burned. But we'll touch upon that later. It had an all-time high of around $250 per coin back in 2021 and now sits at $32 per coin. As mentioned earlier, there was a lot of pre-allocation for Solana, but after this they started distributing to the public, and this is what their supply schedule looks like so far. As you can see, early on there was the initial allocations, then in December of 2020 the staking rewards started to become available. As we can see, the supply for founders, validators and the rest of the initial allocation will be distributed all around December of this year to early January of 2023. And then after this, the only way of creating new coins will be through staking. The staking yield is constantly changing as it's based on a calculation that has many changing numbers, but right now the expected staking reward is around 5 to 6%. This would be slightly higher, but the validators also take commission from staking. If you want to become a validator, you can then claim all the rewards from staking, plus the fees from being a validator. To become a validator, you have to put up 25,000 Solana, which will be locked up. From there, you can earn both staking rewards and transaction fee rewards. Staking also helps secure the network, so by staking, you're helping the whole Solana ecosystem. You can stake your Solana into multiple staking pools on exchanges such as Binance, Coinbase, and FTX. All you have to do is buy Solana, then choose how long you want to stake for. Staking rewards are calculated at every epoch, which is a period of time on the blockchain. For Solana, this is roughly 3 days, so we'll keep updating your rewards every 3 days. Solana is not a fixed supply coin. The more Solana tokens are released into the circulation with time through the process of inflation. The number of tokens released will be reduced starting at an initial rate of 8% down to 1.5% over the next 10 years. As more coins are introduced into circulation, there are also others that are being removed or burned. The way Solana has decided to combat the inflation is through this burning process of transaction fees. half of every transaction fee is burned and the other half goes towards the validator of the transaction. This artificially gets rid of coins and sends them to a burn wallet where they can't be accessed by anyone. Therefore, it can't be used and is taken off the market. Also, if private keys are lost or wallets can't be accessed, then this adds to the burning of these wallets as they can't be accessed. So far, around 150 million Solana has been burned, which is a considerable amount. This was probably due to the high transaction rate back in 2021 crypto bull run, where we saw explosive price of Solana, plus the transactions that came around due to Solana NFTs. The NFT minting on the Solana network has been crucial to expanding the chain and establishing it. We all know that Ethereum has the biggest market share of NFTs, but Solana is fast approaching them. Back in 2021, the all-time high volume for Ethereum was around $30 billion, and Solana was at $2.5 billion. This means that Solana was around 10% the size of the Ethereum NFT space. However, Solana actually had more transactions in that period, with 2.2 million transactions compared to Ethereum's 900,000 transactions. Many creators have actually started to migrate over to the Solana network as it is much cheaper to mint their NFTs, because Ethereum has very high gas fees, up to $80 per transaction. OpenSea also added to this as they allowed Solana chain to be supported on their marketplace. OpenSea is one of the biggest NFT marketplaces, so this gave more exposure to the Solana network. The biggest collection on the Solana network is DGods, which has an overall value of $70 million over the whole collection. Now there's a lot of new technology which has been implemented into Solana, which has now propelled it to one of the top cryptocurrencies in the world. So the main consensus is proof of stake, which many cryptocurrencies already use. However, on top of this, Solana has introduced proof of history. The biggest challenge in a distributed network is agreeing on the time and sequence in which events occurred, as nodes within the network can't trust which timestamps on messages received from other nodes. Solana attempts to solve this by creating a cryptographically secure source of time across the network. Proof of history is a high-frequency, verifiable delay function, which requires a specific number of sequential steps to evaluate but produce a unique output and can be publicly verified. This means that nodes can create the next block without having to coordinate with the entire network. This means they can trust the timestamp and ordering of the messages that they received. This then leads to a reduced consensus overhead, and therefore the transactions on the network can be higher. There is also technology such as BFT and Turbine which help to optimize on top of proof of history. However, with all this new technology comes errors in the network. Sadly, Solana has been plagued by network outages, which in the eyes of the public will set back adoption on Solana. So the latest outage was back in July of this year, where the network was out for around 5 hours. This has happened multiple times in the past, with the longest outage being around 20 hours. For a network with so many users, this isn't a good look for the coin. These outages all occur because of transactions on the network. When the transactions reach higher rates, it causes the network to overload. This means it has to reboot in effect and start the network back up again. This problem is called chain splitting and is very hard to debug on this scale of network. Basically, two chains create the same transaction, and therefore the network can't decide which one is the original one. The trading volume on this network is around $600 million worth of trading per day, and this means that all these transactions have to be halted and the network is unusable for that amount of hours. So until Solana fixes this problem permanently, then it will never be able to take over Ethereum or be as big as Ethereum. Now we have talked about the tokenomics behind Solana, let's get into the price predictions for the future. Solana's price only started rising back in February of 2021 when the whole crypto market was mooning. However, unlike other crypto giants, Solana didn't feel the crash in the late spring of 2021 as strongly as Bitcoin or Ethereum, yet the price still declined. Right now the price for one coin is at around $32, which is very low compared to the highs of around $250 back in 2021. This sets a precedent that this coin has the potential to be that high in the future because it has happened before. Right now we are in a crypto winter, which means the price of all coins are lower than they should be intrinsically. So now is a great opportunity to buy a lot more different coins because the next bull run is coming and many of these low price coins will be going up lots in the future. I predict that it's going to happen after the next halving of Bitcoin in around 2024, so probably the bull run will be in early 2025 or late 2026. Now when we think about the predictions for the next 2 years, we'll probably see a steady price which will rise a little bit, but until 2025, the price will probably go from $32 today up to around $60 by 2024. Then looking past the bull run into 2025, we could see the price explode upwards above the all-time highs of 2021. We could easily see $400 per coin if this bull run happens by 2025. The Solana network also needs to sort out the network outages, because in this next bull run we'll see a lot of transactions hit the network and it needs to be able to handle this rate of transactions. Looking onwards past the bull run, we could see crypto start to stabilize in price at around 2030, which I think Solana will stabilize out at around $500 per coin. And then from there it will slowly rise if the network keeps improving and adding more features and dApps. The burning of Solana also increases the price when there are lots of transactions on the network. So overall, if you bought in now, you probably see a return of 2000% by 2025 and 2300% by 2030. I think Solana will still be in the shadow of Ethereum for a long time, but will start to gain traction on it slowly. Now, if you want to learn more about Solana, then head over to the Solana documentation website and explore that. Also, if you want to learn more about coins, then check out the Tokenomics series on the different coins I've covered. Don't forget to like the video and subscribe to the channel for more crypto content.